Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A dismal day in the markets for both Bitcoin and the Bitcoin miners. However, we're going to be focusing on earnings in today's episode. Now, Mara and Riot have already released Q2 results. We're going to be looking at those or actuals in comparison to our estimates for both CleanSpark and IREN, which are still due to release. There's a lot of data, a lot of comparison and analytics in today's episode, really comparing and contrasting the big four in the Bitcoin mining space. Before we get into it, take a second, hit the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below which of these four is your top miner and why. With that being said, let's get into today's episode. All right, away we go. Not the best looking day in the markets for Bitcoin or the Bitcoin miners, unfortunately. Hoping for a big finish to the week, but it looks like that's the opposite of what we got here. If we look at the Bitcoin price to kick things off here today, Anthony, in the 115 range, we've talked about that band that's been forming over the last few weeks. It appears we've broken out of that. Our good friend Freedom by 40 essentially called this pullback or this retreat, and it appears that's exactly what we're seeing here.
Yeah, we've hit that 114,000 today, and we've seen a little bit bounce back up there and back down and back up again. So whether that floor is 114, if it is, he hit it spot on. However, even Freedom will say, there's a lot of luck involved in this. You can only predict so much of the future, but let's hope through the weekend. We normally see it like Friday, Saturday, it'll stabilize. Then Sunday, generally, Bitcoin price starts to move, maybe close to when the Asian markets kick in. I mean, we've had a good few weeks in that sort of range up to 118,000. So when it was dropping today, people might have been thinking, is it a good time to maybe get a bit of Bitcoin at them sort of prices? Because we're yet to hear any sort of really bad news. Everything's positive. Even the White House are issuing positive updates out on Bitcoin and all the bills that are going through being processed and that have already been passed. It's just one positive day after another. So, as I say, it'd be interesting to see who's selling. Whether the impact of trading is affecting Bitcoin. People like longing and shorting the actual asset class. I don't go in for that myself, but I know there's a lot of people out there that do that, and I don't know if that impacts the price itself when you have a lot of shorts or longs affected, trying to control the price. Maybe we get someone on the podcast who's more of an experienced trader to give us an insight as to if that can happen or not. But in the comments, if you understand it more than we do, put in the comments what you think is happening at the moment with Bitcoin. Would be interested to know ourselves.
Yeah, it is hard to make sense of it. We saw that massive sale from the whale, the OG whale. We covered 80,000 Bitcoin. The price didn't even move. Now all of a sudden the price tanks 5,000 on apparently no news. So your guess is as good as mine. I have heard the term paper Bitcoin being thrown around a lot. People trading Bitcoin that's not actually on chain. But like you say there, Anthony, if you guys have a better understanding of maybe what's pulling the price down like this, let us know. In terms of the Bitcoin miners, unfortunately, they're getting pulled down in the very same fashion. So it is a sea of red, a bloodbath, I said on my Twitter today. The standout here, hard to ignore, Riot. They just came out their Q2. They were down, I think, around 17%. I also hold some shares of RIOX, so RIOX. That's a 2 times leverage Riot ETF. That's down 35% today. So definitely turning some heads, a lot of attention on earnings. But before we get into that, maybe we'll talk about the miners in general.
Yeah, I must admit, Bryce, now it's coming together. When you sent me that message before saying right down 30%, I thought the stock price was down 30, but it was obviously your leverage stock that was down 30%. Yeah, everything's red today, and Riot brought out their results last night, and as soon as results came out, the market didn't really take them as they had taken to other recent big tech stocks who've released their numbers there. So it was down in post-market yesterday. And today, as soon as the market opened, we saw it move even further down, and it was down over 18% when I last looked at one point. If you look at the day range, which gives you an indication of how stocks have been during this sort of first few hours of trading, we're actually seeing a little bit of recovery. Stocks are even worse than where they are now. So Mara only down 1.3%. It was down significantly more than that. It's been as low as $15. It's currently 15.86. So, a good half of the stocks have been sort of on that recovery route. As we see the little dots there where they currently are towards the right-hand side of the day range, that means they're performing at their best at the moment. Riot, obviously, although it's improved from 1087 to 1131, it's still got a long way to go to get back to 1207. So, difficult times for Riot today. We've got Jason coming on the podcast on Monday. There'll be a lot of questions for Jason, a lot of information update yesterday, and people will be wanting some answers to some of those issues, and hopefully give us some understanding of what to expect in this next 6 to 12 months. I mean, they've started this pivot, getting on for about 9 months ago now to HPC. We're going to get some news updates to suggest maybe a client's on the horizon. If you've got any questions you feel you want to ask Jason, then put them into the comments as well, and we'll try and shortlist a few of those to ask him as well. We did exactly the same with the CFO from Mara, Salman Khan, the other day. He took 3 or 4 questions that were directly from the retail investors. And to be honest with you, they are a common theme. So I'm sure there'll be a few questions out there for Jason. We've seen a lot of comments on social media already about the results. But we'll cover earnings in very briefly coming up in the podcast. We don't want to spend too much time on it because we've got Jason himself coming on the podcast to go through in a bit more detail and a bit more colour to it, and give us the bird's eye view of what's really going on in that company at the moment.
Yeah, we sure do. Looking forward to that one. And stock compensation obviously will be on the docket for that interview, as it was with Mara Holdings. So we're looking forward to that. Before we get into the earnings highlights, though, I wanted to take a quick look at Hashprice. An interesting little jump. We can see circled in red there, up above $64. We've retreated. We're in the $58 range now, obviously reflective of the Bitcoin price pulling back. But interesting on the forward hash curve as well now, Anthony, none of the months coming up are above the $60 price point. So we have seen this trail off. Interesting fact, this is actually not something Luxor creates. This is the midpoint between the buys and the asks on the future market. So a little bit of insight to maybe where the market feels Bitcoin price or hash price may be going over the next few months.
Yeah, and to be honest, it's a lot reflective of the Bitcoin price. So we've just seen it drop now. The Bitcoin price has dropped as well in this last sort of 12 hours. Looking at the global hash rate as well, it's still in that sort of low 900 range there. So again, we talked the other day about this sort of flattening out of this steep curve that we've seen over the last couple of years with difficulty. Not as much hash rate coming onto the network, or new hash rate coming on. We've talked about those miners that have still got a bit of growth for the remainder of 2025, but the vast majority of miners aren't increasing any more hash rate. Some of them might be changing their fleet to a more efficient fleet, but not necessarily going out there and buying new facilities and putting new machines in there. We're seeing a lot of that power now directed towards HPC in the future. So only the likes of Mara, CleanSpark, and Hive Digital really trying to grow significant amounts for the remainder of 2025. The rest have pretty much achieved their targets, now focusing on HPC.
Yeah, they certainly are. We were on a Spaces yesterday talking about ASIC pricing compared to where we're at in this cycle. And it was interesting as the efficiency of these machines goes up and the amount of these miners that are shifting their megawatts to HPC, the demand for the actual number of units of ASICs is nowhere near what it was last cycle. So interesting dynamics as that plays out for some of the ASIC manufacturers. Now, today's Friday, obviously, TGIF. That means it's newsletter day for Power Mining Analysis. Now, if you pop over to the website, you can sign up for the newsletter directly under the news tab. You'll also notice we've added a new highlights or headlines portion under the news itself. So you can go in, take a quick read through any of the top stories in the sector or through our actual podcast. So if you don't have time maybe to make a full 20-30 minute episode, you want to get the Cole's notes, that's a great way to do that. And you can see a nice little example of the newsletter you can expect each week. So with that being said, Anthony, on to the main event here. Riot came out with Q2 numbers. We're going to be reviewing those. We'll compare them to Mara. We've seen two of the big hitters out of the gate in terms of actuals. And then you've put together a special little table for us to talk about where we project CleanSpark and IREN to maybe be this quarter as well. So a lot of data coming up. But before we get to the main event, let's talk Riot Q2 numbers.
Again, we've had the two big miners release their numbers this week. We've already covered Mara in a previous podcast. Right today, the last quarter, again, it's been an improving quarter for Riot. They've, been strong in terms of getting that hash rate up to 35 exahash with Corsicana now fully utilized in terms of the 4 buildings there for Bitcoin mining. So producing 1,426 Bitcoin over the last quarter. That's a daily production rate of just over 15 Bitcoin a day. They've got one of the largest hodls in terms of Bitcoin there. I think they're top 5 or top 6 in terms of Bitcoin miners that have Bitcoin on the balance sheet. They've got 19,273, and even at today's prices, that's way over $2 billion. In terms of the fleet efficiency, this is something that also Riot have been keen to utilize well by getting the micro BT immersion cooling machines into that facility at Corsicana. That's now down at 21.2 joules a terahash. We're not going to see much change in that there because they've only got a few more exahash to achieve their target. The target's about 38.4, so they're about 3 exahash away. So we might see them maybe upgrade some of the machines at Rockdale to get to that target between now and the end of the year. In terms of revenues, 153 million revenues, which was a nice increase from the same quarter of the previous year, 190% increase there. They did make a net income profit, so 219.5 million net income. However, that does include a 470 million unrealized gain on the Bitcoin held. So the Bitcoin price back in March was in the low 80,000 range, and by the time we got to the end of June, it was 107,000. So the difference between those two numbers there is effectively the increase in value for every Bitcoin held on the balance sheet. So, we saw with Mara, it was 1.2 billion. Well, Riot don't quite have the same hodl as Mara. They've got about just over a third of the price. And if you look at what they've actually gained, 470, it's not far off being a similar percentage in terms of unrealized gain there. They did have a few one-off charges during the quarter. We'll probably put these to Jason. So they basically closed the conversations now with Rhodium and paid Rhodium. I think that was a $158 million settlement there. They've also been selling the Bitfarms investment, and that was selling a loss there as well. So not been a great quarter in terms of them two there. But what it does is it gives them sort of like a bit more of a clean slate to work from in the future. So, probably best to get all these issues out now on paper, in the accounts, through the numbers. And then when we look at the next quarter, really, we should be starting to look then as a real clean position for Riot, with all parts of their business working at 100% without any distraction to affect the numbers there. Cost of power, we always associate cost of power as low with Riot. They do have a PPA for the Rockdale facility, 345 megawatts. It's about 3.9 cents. But you see the net cost of power there, 3.5. That's because they've been able to utilize the market rate at Corsicana. And we know from IREN, who also use market rate in Texas, they've been able to achieve about 3 cents on a number of the months in that last quarter. And so that's, if Riot have been able to do the same thing, it brings down effectively the PPA cost to 3.5, this blended cost across the whole of the 3 facilities that they have. They also have the one in obviously Kentucky as well there. Now, another thing that Riot do, because of that PPA, they're allowed to effectively sell power back to the grid when it rises, and they've managed to achieve 8.3 million in power credits over that quarter. So that brings down their cost of power. And we'll talk a little bit more about that in one of the tables when we look at the margin. Adjusted EBITDA really looks at all the adjustments and removes all the sort of like the non-cash expenses like depreciation, stock compensation, mark-to-market derivatives and equity securities. That came in at $495 million. So that was a real positive there. And we saw last night with the likes of Strategy coming out with their numbers, and I think it was some in the region of about 14 billion. So these Bitcoin companies now with the FASB rules are going to have some great quarters when the Bitcoin price rallies. Another thing they've brought out on their update is they brought out the hash cost as well. So we've talked about hash price on the Luxor slide that we showed you earlier. Riot are now bringing out a hash cost there. So for literally every petahash that they have in their business, so that's effectively at the moment 35,400 petahash, they're getting the cost is $25.4 per petahash per day. And when you compare that to an average hash price of 51, that gives you a nice margin of around about the 50% mark in there. And again, we'll talk more about that percentage when we look at the cost of a Bitcoin slide.
Yeah, we certainly will. Now, you mentioned the rhodium update there. In your opinion, Anthony, you talked about some of the highlights here. In reality, the market was not overly impressed with these numbers. The share price has dipped. What do you think is the biggest red flag or concern in the investor community based on what you saw? Was it the rhodium settlement? Was it stock comp? Or was there some other component here?
I think to be honest with a lot of these companies now, any sort of negative news is going to impact, and it's just the sheer size. Now they've come clean about the rhodium. When it happened a month or so ago, they put out the update to say that this has been agreed, and also with the selling of the Bitfarms stake there, they've been selling that down there. They've got under 10% now holding in Bitfarm. At one point, it was 19.9% holding there. So those sort of that loss in that initial investment in the Bitfarms and this payout to rhodium, albeit they've effectively now got the use of that 3 exahash at Rockdale, and I believe they've kept the machines. I don't know what state the machines are in. Maybe Jason can give us a bit of an understanding of what they were able to salvage from that. But part of me, although it's not great business, part of me starts to think actually it's wiping the slate clean, wiping it clean quickly, and avoiding further legal costs, because these types of discussions start to incur significant legal costs. And I think their legal costs for the quarter were in excess of about $12 million. So, that should start bringing those types of legal costs down as we move forward and get them to focus on what we really want them to do, and that's to deliver the HPC, to be a great miner with 38 exahash there, and to have those two strategies working hand in hand to start bringing back some shareholder opportunities going forward.
Yeah, and I'm sure the Bitcoin price tanking today didn't help anything either. So we'll get some more updates on the HPC. We've got some questions about some of their new hires, some of the steps they've taken, some of the land acquisition strategy. We've got a nice picture of Corsicana here. Now, you talked about the direct cost or energy cost to mine. Another topic we got some clarity on was the CapEx expenditures in 2025. So this table we saw in the last deck as well. Again, we'll have some questions for Jason in terms of funding post 2025. But as you can see, based on this chart, looks like they've got most of the major expenses covered this year.
Yeah, so already year-to-date spend there nearly 180 million, and the forecasted capex for the last two quarters of 2025 there 201 million there, and a lot of that is around the sort of like continued expenditure required for the 600 megawatt substation that's being developed at Corsicana, also including the land site there by purchasing more land, obviously getting additional water, etc., etc. All those requirements that you need to have a great HPC data center working, well. And when you consider the distance from Dallas, it's literally just on the outside. It's half an hour from the sort of like center of Dallas. So it's from a location point of view, it's quite well situated there. Now they're also going to be doing some updates at Kentucky and Rockdale. And again, I think we'll give Jason an opportunity to talk more about this and talk more about what the expectation is. I mean, with regards to Bitcoin mining, most of the Bitcoin mining's been done now. So a lot of the expenditure going forward now should be really towards high performance compute, because at 35.4 exahash, they've only got about another 10% to get to their target of 38.4. And so having got to that target, in the next few months or so, we can start seeing everything then really towards HPC, getting that client, and then delivering a great facility at Corsican. And we know from what we've seen there, we've been to that site, we visited that site there, we saw the first 2 or 3 buildings when they've been put up there. And we know that they can do this in fairly quick time, just like we've seen the likes of IREN deliver their buildings for their 50 exahash at Childress.
Yeah, nice to see they've rounded out that Bitcoin mining target, and also interesting to see they've now increased to 45 exahash per second by Q1 of next year. So it'll be interesting to see whether that change in strategy is maybe some softening in the HPC market, or, as you say, Anthony, just related to the Kentucky expansion or the rhodium assets they required. So a lot of questions for Jason. With that being said, though, we've now seen 2 of the heavy hitters out of the gate, both Riot and Mara, both Q2, both major players in the US Bitcoin mining market. Now, we went over this slide from Mara yesterday. We can do a quick refresher here, and then we can get into some side-by-sides on what we've seen in actuality so far out of the miners.
Yeah, absolutely. We covered Mara the other day there, effectively a net income of 808 million. But again, a lot of that was this adjustment for the valuation of the Bitcoin. And that was a $1.2 billion dollar gain on that Bitcoin they held on the balance sheet there. So if you take that away from the actual net income, 808, you effectively have, a significant net loss. But as we discussed on the podcast, we are looking at a company that is still growing their strategy, trying to deliver, more and more of their own sites, looking how to work alongside data centers, providing HPC, and how Bitcoin mining and these types of businesses can work together, and doing a significant amount in other parts of the world now, in the likes of Europe, in Northern Europe there, in Scandinavia, and also in the Middle East. So looking to grow those there. They've got a hash rate target of 75 by the end of the year. They're already at 57.4, so not too far to go on that there. And if you listen to the podcast that we have with Salman there, the expectation probably is to, maybe upgrade some of the older machines with newer machines to get closer to that hash rate target. Because he indicates that some of the hosting contracts are still about another 12 to 24 months in place there. So no real chance to sort of move out of those contracts unless you effectively pay out the contracts. And we've noticed before, I think it was Mara who gave Hut notice to move from the contract and paid a full year of their management services contract out there. I think it was about $13 million. So I don't think Mara are going to be breaking those contracts in the near future there. They have explained about that, that nobody wants to pay a hosting fee. But even with that hosting fee and the energy costs there, they were still able to achieve a gross margin over 50%, which is great because in the previous quarters, they've been nowhere near that figure. So I would say, again, like Riot, some green shoots in both of these updates, some questions, really to be asked, probably around about, things like the stock compensation, also about salary packages as well. There's a few questions to be asked there. We're still in if we're saying it's a growing business, when we should have the salaries reflect of that growing business. We're not quite at the likes of the Mag 7 companies yet. We might get there in a few years' time, and then absolutely pay them sort of pop star wage when we get there. But at the moment, we're still growing these organizations. And, I remember when some of these directors came into the organizations 4, 5, 6 years ago, and salaries were around $500,000. And if you have a bonus of a similar amount or even double that there, you can do the maths and compare to where we are now. And we haven't seen that improvement for shareholders in that period of time. So that's the challenge we've seen with a lot of mining companies, and it's not just highlighting these two; it's highlighting a whole raft of them. So I think there's a big question mark, and retail are not happy. Institutions are certainly not happy because they're the ones that aren't focused as much in the mining space as the retail investors are. So I think we'll see maybe some changes in the future with regards to this.
Yeah, and we've got a little clip from Matt Siegel at the end. We'll talk about specifically some of those changes. Interesting discussion, though, around the comp. The other one that spurred a lot of discussion on social media is the accounting treatment of the HODL. So this FASB accounting treatment, it's really not black and white, and that's what I've determined over the last few days. You can't give these companies 100% full credit because it's not a realized money in the bank. You can't give them no credit because it is part of their strategy and they did invest in an asset that has gone up, just like real estate or a stock or anything else. So there's somewhere in the middle, but you and I are trying to figure that gray area out. But another very contentious point this earnings.
Absolutely, and the market has reacted accordingly. So Mara didn't see any jump in their share price when they announced a 1.2 billion increase in the value of their Bitcoin over quarter by quarter. In fact, the opposite. The share price, dropped not as much as Riot's dropped. I mean, Riot had a few other issues as well. We've talked about Bitfarms. We've talked about the rhodium issue there. But also with with a revaluation of 487 million. The way I look at it though is, just think if either of those companies had sold Bitcoin in that first quarter when the price finished at $83,000, the fact they've kept it to now and can utilize it now, and it's worth today it's worth $116,000. So that's a big jump from where we were just literally 4 months ago. So they have more buying power, but at the end of the day, the market's going to, not look at that gain in the accounts as anywhere near. It's nothing to do with cash. It's just really a revaluation of of effectively the balance sheet because, that Bitcoin is allowed to be valued at either the cost of the Bitcoin itself or a market fair price of the Bitcoin, which is the current price. And some companies choose to do it at cost price. I think CleanSpark, in their updates, have been choosing to use the cost value of Bitcoin because you have a choice to make.
Yeah, you're exactly right. And nowhere did we see that more evident than with strategy earnings. So that one taken even to a further extent, billions of dollars of adjustment on their FASB accounting, but really not reflective in the share price at all today.
No, 14 billion. Yeah.
14 billion. So I wonder what they need to put up to get a positive day for strategy. Again, the Bitcoin price, I suppose, doesn't help. So now that we've reviewed both Mara and Riot, you've put together one of these comparative tables, and we love seeing these type of things. So can you walk us through the numbers? I know we've reviewed many of these, but in your opinion, Anthony, what stands out between these two companies? Or as someone who's been in the accounting field for 25 plus years, where does your eye go to immediately on this page?
Well, I've just done a very brief extract of the balance sheet because we've talked about their earnings and how they did there. But the balance sheet is also a good way of seeing, what value shareholders have, when they're buying their shares in these companies, what they're actually buying. We always look at the current ratio because we want to compare what each company has from an asset perspective, so current assets versus current liabilities. Mara, for instance, this time here have more current liabilities and current assets. So over the next 12 months, the assets that they have at the moment, which they can put into effectively current assets can be transferred into a cash basis within 12-month period. They have 236 million, but their liabilities they're required to meet in the next 12 months is 441. Now, it's not a red flag. I mean, we know that Mara can raise capital. They've raised over 3 billion in convertible notes in the last sort of 6-7 months, and they can sell shares like they have done. I think they've sold 20 million shares in the last quarter. And if you use the average price, maybe $16-17 a share, that's 300 million in shares there. So I don't think there's too much hassle in meeting the current liabilities there. Ideally, you want something above 1. But I know that supermarkets, have a current ratio even worse than 0.54 because they're turning over so much stock on a regular basis. They don't need to have that immediate cash flow sitting in the bank. It will come through sales. Riot, on the other hand, they have quite a significant amount of current assets, 516 million, and they have current liabilities, 374 million. So both these companies increasing their liabilities by taking on some of this debt and the convertible notes, and some of the debt is in the current liabilities, so within the next 12 months, and some of it is in what they call the long-term liabilities, anything over 12 months. But Riot have enough current funding within their assets that can be liquidated to cover their liabilities. So not as much an issue there, 1.3 times the amount of assets to liabilities. Then we look at what actually each company has on the balance sheet, and their balance sheets are really fresh because both of them released their numbers this week. So we can see Mara there, $4.8 billion of assets. That includes Bitcoin at the value at the end of June. It has risen from 107,000 there to where it is today, 116,000. So again, even in that short space of time, Mara's is another $9,000 more for the 50,000 Bitcoin they have on the balance sheet there. So it's another 450 million in terms of valuation that would be on that net assets there. Market capitalization, well, we know that Mara was well over 6 billion at one point and Riot was over 5 billion. They've dropped down accordingly with the share prices this last week or so there. Total debt for each, well, those include now the sort of the main convertible notes. So I did tell you Mara took about 3 billion of convertible notes out of the last 7 months. If you look at that there, most of that debt there, I think 2.4 billion in the long-term liabilities is the debt there, and also they have some in the current liabilities as well. So cash and cash equivalents over 100 million for Mara, 277 million for Riot. Riot need a bit more in terms of cash because they have that 345 megawatt PPA agreement at Rockdale, and having that agreement there means that you have to have certain conditions about keeping cash available in case of the power movements can affect being called, margin called on that particular type of derivative. And then we look at the Bitcoin hodl. We know Mara's 50,000 Bitcoin. That's getting close to 6 billion. And Riot's 19,273 Bitcoin, well over 2.2 billion. And that gives them an enterprise value, actually very similar to where they are at the moment, 2.6 versus 2.5. So very similar enterprise values for both companies. Enterprise value is taking the market capitalization, adding any debt to that figure, and then reducing it by cash or cash equivalents. And for this calculation, we've also looked at the Bitcoin hodl can be something that can be liquidated really quickly. So we've included that as a cash and cash equivalent. And that way it gives both companies a very, very similar enterprise value. Now, net asset value to market cap, again, quite close, 0.82. So for every dollar you're investing in Mara at the moment, you're getting 82 cents of assets. And for every dollar in Riot, you're getting 79 cents. In terms of debt, Mara now with those big convertible notes, about 56% of their balance sheet now is debt, and with Riot slightly less than that, 27% or 27 cents in the dollar. We always show in terms of the enterprise value compared to what their current hash rate is and future hash rate. Those numbers have been coming down significantly over the last sort of year. We saw those figures well over $100 per exahash. They've come down significantly there, but Mara's looking quite good actually, only for $46 million per exahash. Riot's at 72, and as they grow more hash rate to get to their targets, that'll come down even further. Now with the right figure there, I know that's based on the old hash rate, future hash rate of 38.4. That needs to be adjusted for the latest hash rate, which they include in their update, so that'll get changed, and we'll get that shown on a future podcast. And in terms of shares outstanding, both companies sold approximately 20 million shares in the last sort of 4 months since the end of March. So again, raising significant amounts of capital via using that lever of the ATM, which both have got available. And we might see, I think Riot's getting close to using its ATM, so maybe we put a question to Jason on Monday about what's the thought process as we go into the last sort of couple of quarters of 2025? Do they have sufficient ATM to cover what they need, or do they expect to raise another ATM in the near future so they can continue to raise capital to meet the requirements of the HPC?
Yeah, thanks for going through that. There's a lot of good data there, and it's interesting for me to see how similar some of these categories are in terms of enterprise value, the shares outstanding. It's nice to be able to compare really pure play miners, at least at this point. Obviously, Riot has expressed interest in HPC, but at this point, more or less pure play miners. Now, that takes us to the next step of today's discussion, the big four, so to speak, we're calling it. All pure play miners more or less at this point. IREN has, again, some HPC exposure, not yet signing that big contract we're waiting for. But if we take this a step further, we say, okay, Mara and Riot, actuals are out of the gate. We can look at those numbers, concrete. We have a pretty good understanding of CleanSpark and IREN based on a lot of the information that's provided and some of your magic work there with the calculations, Anthony. So you've put together now a top four, a big four table, allowing us to really look at this quarter or 3 month period between all four of these heavy hitters.
Yeah, and we've got actual data from Mara, right? So that wasn't too challenging to put together. So, and for all four, we know what the that's been produced over the last over that second quarter of 2025. And, you can see from those numbers there how close now the CleanSpark, IREN, and Mara are, all three over 50 exahash. Obviously, CleanSpark and IREN have grown rapidly in 2025 and 2024 to get to that number. Mara only grew about 3 exahash in that last quarter. So, you can see, I think this next quarter will sort of like be an out-and-out race now between these three, who mines the most Bitcoin, because we know that on certain months, Mara doesn't quite seem to hit the same productivity as IREN and CleanSpark, and IREN and CleanSpark are effectively now neck and neck in terms of hash rate, but also in terms of operational performance. There's not that much between the two of them in terms of what they deliver each month with the expected amount of Bitcoin mined compared to the hash rate that's energized. Now, revenues were obviously straightforward for Mara, right? Because we know what the revenues were and we know what the Bitcoin mined was, so we could do the quick divisor from there. And I know that my right number matches the Riot's number in there exactly there, so it was the same calculation I used that they used. For IREN on every monthly update actually put in the revenue they receive for each of their Bitcoin mined during the month, because they sell on a regular basis. So they actually put that in a monthly update. So I was able to go through the April, May, and June updates and calculate the revenue, pretty much exactly. And the same with their costs as well. They also put the cost of power associated with Bitcoin mining. So those two numbers should be exactly the same as when IREN released their information, which could be towards the end of this month or early September. For them, it's going to be the end of year accounts. They get a bit longer to do those, so we won't be getting them in the same time frame that we've had the other three. But what it clearly shows, if you look at the gross margin anticipated for IREN, 73.8%. That's not too far away from what we've got on our live miner margin page on the website. So go to the website and you can do some sort of comparisons of some of these companies here and see where we are there. Mara actually, again, improving over that quarter, 53.6%. Riot, probably not as good as previous quarters in terms of that gross margin. So that's come down a little bit. That may be, down to, some of the power costs, 3.5, although being good, I think they've had lower than that before. So even that small amount of change for them can impact the numbers quite significantly. For CleanSpark, I've had to make some sort of educated guesses. Now on the revenue side, because I have information on a number of miners who sort of apply revenue on a regular basis, and we've got that data month by month, I can sort of give a good educated guess on what the revenue should be for that quarter, for CleanSpark, and therefore for each Bitcoin mined, I'm thinking it's going to come in at around about 99,512, which is a sort of fairly close to what the other three are anyway. Direct costs, again, using effectively what what their margins are, looking at what their previous quarter was, and applying a very similar amount in terms of power to that there, and I get a gross margin for them 64.5%, which is pretty good, and that's expected to be in that sort of range. I think anything over 6% will be really, really good. Then we come on to some like the other costs there, the operating costs of the organization. Let's not forget, it's not just power. Power is the biggest cost, but some of these other costs are real costs. You've got to pay people. You might have some site costs in there. You've got professional fees. You've got other operating costs, G&A costs there. These are all, so be very clear, the operating costs here are all the cash elements. So this table does not include a couple of the really big costs that are non-cash costs. So it doesn't include depreciation, that's a real cost, and it doesn't include stock compensation. And believe you me, that is a real cost. Both of those are costs there. The cost of buying all this equipment, buying these sites, and then, you know, the way we actually treat that in the income statement is by depreciating them over a period. And that cost there is effectively, you know, effectively showing how you've invested the money into buying these. But for this particular exercise here, we're looking at the cash costs only. So again, I've gone through all the previous earnings for CleanSpark and IREN and come up with some educated expenses. I've not increased them significantly because these are the more controllable costs. Yes, you know, you would expect some staff increases at both CleanSpark and IREN when they're growing that amount of hash rate, but IREN grew it all on one site. So I'm not suggesting they're going to be doubling their cost of manpower just because they grew their hash rate by 50%. I've gone a bit closer to maybe 10 to 15% increases there. So again, going down and making some really educated guesses as an accountant, I come up with a total operating cost for CleanSpark 19,000, and again, IREN slightly less than that, 19,200. And then if we look at the operating margin, so this takes account of, not just the gross margin, but taking off the operating costs as well. You can see that even when you take off all the cash costs, IREN still have a operating margin of 54.3%, which means that, effectively, it's costing less than half a Bitcoin to include all their cash costs that are there. CleanSpark very good at 44.6, and Mara and Riot 27%, pretty much neck and neck. 27%, 26.9%. And that takes us to what it then costs to mine a Bitcoin using the figures I've used here. So again, when we get IREN's and CleanSpark's data, we'll be able to go through that. But I think they'll be fairly close to what I've put here. CleanSpark at 55,000 to mine a coin, IREN at 45,000, Mara and Riot within about $1,500 of each other. Mara at 73,000, Riot at 72,000, and that percentage there of as a percentage of the cost of the revenue of the Bitcoin, which is shown above there. Again, IREN lower than 50% to mine a Bitcoin, which is really, really good. I mean, and that's based on a Bitcoin at 98,000. Well, we've just talked about the Bitcoin today. It's nearly 18,000 more than that. So that margin number comes down even more from where it is now. Now, I can tell you that if you were to include depreciation and stock compensation, I think IREN certainly comes out with a net income based on its Bitcoin mining business, and CleanSpark also comes out with a net income incorporating those two costs there. But for Mara and Riot, absolutely nowhere near. I think Mara and Riot probably heading towards $150,000, $160,000 respectively, if you include those two costs there. But this table here is really about showing what the costs are. And when you've got a business, the key thing that you must understand is when you have revenues coming through the door, you must have more revenues coming through than your costs are incurred, otherwise you're going to go bust. And that's why we do show the cash costs. So what comes in, what goes out, can you still manage a business based on what's coming into the business and what's going out? And all these four companies in that quarter were able to show, from a cash perspective, they were able to manage the business okay.
That's why they say cash is king in business. And as we expected, calendar Q2 here, pretty positive for the miners. So we're curious to hear your thoughts below. Which of the four do you feel performed the best? Are you most bullish on or loading up on right now? Now, we mentioned CleanSpark and IREN yet to report. CleanSpark's coming out on the 7th. I just mentioned the difference in fiscal year versus calendar year. IREN, this is not their Q2 fiscal, so they're going to be putting out their year-end earnings a little bit later. So it'll be interesting to compare and contrast your numbers versus theirs. Now, I said earlier a little tidbit, Matt Siegel talking about stock comp. And this is specifically addressed to Riot. So we're going to be talking about this with Jason on Monday, specifically referencing this tweet or maybe Wall Street's interpretation of this stock comp. But I wanted to get your thoughts on this. It appears Riot, at least, is taking some meaningful actions, but not until mid 2026.
Yeah, and I think some of the issue is because now there is a lot of shareholders who are not very pleased with what they're seeing in terms of stock compensation. And Jason's, has articulated what you see on there. Let's be very clear. We see the figure, 30 million a quarter, so that's like 120 million a year. That's not necessarily the amount of stock compensation that physically gets paid out. That's the maximum that can get paid out if every tick in the box is achieved. And he was able to talk through how stock compensation will be paid, and some of it's based on the fact that they're part of the Russell 2000, and therefore how the company performs as part of that index compared to other companies within the index. And Mara have done something exactly the same. If you remember what Salman said on the podcast this week, when we asked him how theirs was achieved, he also said that they started to look at performance in the Russell 2000. The issue is obviously for shareholders is at what price point was Riot's and Mara's indicated on that Russell 2000. I think remember rightly, Riot's was in the sort of like the $5 range. So if you think of the share price today, even with the significant drop in value today, it's still probably 100% higher than what the price is that's used to calculate performance. So the chances are, unless it drops another 50%, it's still going to be in a position where maybe compensation gets awarded. Now it will be on probably on certain levels of performance in that. So it's not a case of if it just keeps above the stock price, it will be compared to a basket of stocks in that Russell 2000. So if all the stocks are performing on the Russell 2000, Riot would have to perform even better than the majority of stocks to start getting significant amounts of it. But even at that price there, I mean, I still think 30 million a quarter is a sizable amount. And I hope this is sort of like, if they're doing this in terms of reducing it, but not looking for an alternative way to increase salary packages, that would be a step in the right direction and show shareholders that they're here for the long term and not just the short term. Because to me, it looks a little bit, not just Riot and Mara, but across a lot of the companies, I get this impression it's very short-termism. They're looking to sort of like, maybe reap as much as they can get now, knowing that maybe the industry is not going to be there as long as people are anticipating it. And you can walk away with a reasonable package. And we've seen some selling of shares in the last 18 months from a lot of the big companies. A lot of the CEOs and senior management teams have been selling shares. We talked about obviously that with Mara and both Fred and Sam have been selling shares because they've been advised to reduce some of their portfolio size. But we also saw selling last year with the likes of CleanSpark's team there sold about 40 million shares in the space of a couple of months back in March last year, and the impact that had to the share price. And we've also seen selling with a number of other senior members from other mining companies as well. So it does need a look at the whole salary and package that are awarded here. I agree you should be awarded for bringing out there. If you can deliver what Nvidia have delivered, and bringing those revenues associated, then pay that sort of award. But we're not quite at Nvidia level yet. Let's remember we're in the Bitcoin mining space. Maybe in years to come we will get to the Nvidia level if Bitcoin price gets to those numbers that Kathy Wood and Michael Saylor have been quoting. In the sort of 5, 10, 15-year phase, then we'll all be we won't be too worried ourselves about the what packages, because we'll be sitting there with massive Bitcoin profits to worry about it.
That's exactly it. As long as it all moves up comparatively or in unison, I'm all for it. But nice to see that even some of the Wall Street advocates or names in the space are starting to take notice. Now, two other housekeepings we wanted to bring up. Gryphon, ABTC, they've set their proxy vote date for this merger, August 27th. So that's the next step in this IPO process. Obviously, the spin out of Hut 8. Coming together with Gryphon and ABTC to form this American Bitcoin miner. The other one here, Canaan, starting to supply some equipment or machines to CleanSpark. So we covered a very similar story between Canaan and Cypher, I think 2 weeks ago. But nice to see Canaan again breaking into maybe some of these new companies or new partner opportunities within the Bitcoin mining space.
Yeah, I mean, Canaan have been that sort of one of those top three suppliers with the likes of, Bitmain is the biggest supplier, and then you've got MicroBT. Canaan probably falls into that third place, and then you've got a lot of these new entrants. But this is a good chance to see some of the orders coming out from Canaan. And bear in mind, we know a lot of the miners don't just stick with one supplier, and the likes of CleanSpark, we know they've had orders with Bitmain, so it's nice to see them differentiate. Maybe they've seen some, potential of a quicker return on investment with these machines here. It's not a significant order, but it's a decent size order. And if this works out really well, then maybe more and more miners in the space start going down this route and providing more orders. But yeah, we'll keep an eye on that one as we go forward.
Yeah, we certainly will. So that brings us to the end here. Let us know in the comment section below. Do you think the numbers we displayed today are close to where we'll see actuals come in? Which of the four are you most excited for or most bullish on right now? And of course, what are you doing today in light of this pullback in the Bitcoin mining space? If you're still watching, hit the like button. Feel free to subscribe and have a great weekend. We'll see you back here Monday.